Silver and gold investors, we have massive news stories today that will affect the price of silver, gold, and the precious metal mining stocks, will affect your life. Elon Musk, major warnings. Elon Musk, Vivek, Ramaswamy, big news that will send shockwaves through the U.S. economy, will impact things like inflation. Oh, and we have big inflation news this morning as well. We're going to cover it all and talk about how it's going to impact you, your life, and the metals. Thank you for being here. I have a special sponsor this morning. We have a special sponsor for this live stream video, 49's Gold. We'll talk about them a little bit later. But let's start with talking about what's going on with Elon Musk. Big, major breaking news overnight. And guys, this will have massive impacts on the United States economy, on inflation, and on the price of precious metals. They're calling it the Manhattan Project of our time. Elon Musk and Vivek Ramaswamy to head the Department of Government Efficiency. Okay, they've been selected by President-elect Donald Trump to head the Department of Government Efficiency, DOGE, where they will, quote, slash excess regulations, cut wasteful expenditures, and restructure federal agencies, calling it the potential Manhattan Project of our time. There they are, Vivek and Elon, but wait till you get a load of this. Elon previously predicted that he could cut $2 trillion from the U.S. federal budget. Guys, that would send massive shockwaves through the U.S. economy. We are heading into a period of so much uncertainty. It is going to be crazy here in the next year and a half, and they're talking about completing this around July 4th, 2026, about a year and a half from now. But listen to what Vivek had said in the past. He said, on day one, instantly fire 50% of federal bureaucrats. Here's how. If your social security number ends in an odd number, you're fired. The downsized government by half, absolutely nothing will break as a result. Now, look, we know Elon Musk is also very concerned about the economy. He's put out some massive, massive warnings as well. And again, this all feeds back to the devaluation of the U.S. dollar. Knocked something over there. This going down in value. And when this goes down in value, absolutely this, right? Silver, gold, precious metals go up in value, go up in price. Let's take a quick look at what else Elon has coming for us. Hold on here. There we go. I'm going to talk more about this tomorrow, but this is also shocking. And what's even more shocking about it is it comes from CNN. CNN, yeah, we jokingly call it the children's news network, but they're saying Elon Musk wants to radically reshape who controls America's money supply. Why is this important? Right? Because if we start messing with the money system, messing with the money supply, who knows how that could unfold? But Donald Trump's return to the White House has already carried the potential for sweeping changes in the Federal Reserve. Right? Are they going to end the Fed? But now a growing question is not how the central bank will operate under Trump, but if it will even continue to operate at all. This is CNN talking about the end of the Federal Reserve. Elon Musk, a key Trump backer who is expected to have considerable sway in helping shape Trump's policies. Well, now we know, right? He's heading up the Department of Government Efficiency. Included a 100 emoji while resharing Republican Senator Mike Lee of Utah's post on X calling for abolishing the Fed. So, yeah, the senator from Utah is a senator, right? Ron Paul put it forth 12 years ago, legislation to end the Fed. The senator from Utah is now putting forth legislation to end the Fed. And he's got other politicians now. When Ron Paul did it, called to end the Fed, nobody joined him. Now the senator from Utah is doing the same thing, and other congressmen and women, and I believe some other senators, are helping co-sponsor this bill. Things are getting interesting. And think about this, guy, CNN running an article about potentially ending the Fed. What else is Elon warning us about, and how will this impact silver and gold? Remember, he previously said it's a financial emergency. We need to cut government spending immediately, because the reality is that all government spending is actually taxation. Sometimes people think of it as it's taxation and some of it's not, but it's all taxation, and it all creates, as you and I know, inflation. And inflation will be the word of the day for silver and gold as we head into 2025, and I believe we will see spectacular gains in the precious metals. Elon Musk also previously said this is a crisis. The U.S. national debt has increased by $473 billion over the last 3 weeks. This was on October 22nd, but look at this chart, right? Look at, that's our national debt, right? Look at, I mean, we're just seeing skyrocketing numbers come out of the national debt. Now, this morning we got the official, and by the way, thank you, basement dwellers, for being here today. Thanks for being part of this group, part of the tribe, part of the club, however you want to think of it. I know you love to hear about silver, gold, precious metals. That's what we have in common. So thank you for being here. I'll put out new content pretty much every day. So if you want to get up to date on what's going on, please subscribe to the channel. Give the video a thumbs up, leave a comment in the comment section, make some friends here in the basement. There are some super smart, super good people like you who like to talk about silver, gold, and precious metal mining stocks. Now let's talk about inflation, because this morning we got the CPI number. We're not going to spend a lot of time on this because CPI, as it comes from the Bureau of Labor and Statistics, I mean, isn't it pretty much generally accepted that it's a complete fabricated number? We'll say that nicely. October inflation data meets forecast. Okay, keeping the Fed, this is the big key. This is why this is so important. Keeping the Fed on track for December rate cut, right? Because that perception, all this is managed fantasy land economics, but that perception that the Fed is now back on track for a December rate cut is positive in the short term for silver and gold and precious metal mining stocks, right? We know in the long run, inflation will rule the day, but let's just quickly look here. This is almost humorous at this point. The Bureau of Labor and Statistics on Wednesday morning, just about an hour ago, released statistics that showed the consumer price index increased by 2.6% over the prior year in October, which was a little bit of an uptick. Now, think about this. Two things. Number one, inflation is going up almost 3%. Okay, almost 3%. Number two, right? Think about what we talked about earlier with Elon Musk and the senator from Utah and this potential to end the Fed, right? Why do we have to have inflation anyway? They're like, oh, it's great. You know, the Fed, number one, has given up on its fight on inflation. That's obvious, right? They're not at their 2% target rate, right? We're almost closer to 3% at this point. And think about this. Isn't this theft from you and me? People that work to earn US dollars, and as soon as you get those US dollars, they're becoming worth less and less. I mean, even at 3%, which we know is a fabricated number, right? We know the real number. I heard Rick Rule the other day say it's closer to 7%, and we're not even factoring in the impact of taxes that we pay on everything. 7% inflation, we're being robbed from. Sorry. I hate to break it to you. If you work, right, if you're part of the minority in the United States or did work and earned US dollars, I think everybody's pretty much worked at some point, the system is set up then to rob that from you. If it goes at 3%, 7%, 20%, like some people said, like unofficially was the inflation rate in 2022, they're robbing value from you. Now, you know, and we'll get off on a slight tangent here, the way to protect yourself from having that value robbed from you is with this. Because for thousands of years, silver, gold, precious metals have protected us from inflation. Let's go take a look at the CME FedWatch tool, because that will give us insight into what the odds are. I want to refresh this. This is Chicago Mercantile FedWatch tool. As you can see, the next Fed meeting will be in 35 days and 3 hours. The countdown's on. We can't wait to hear from our friend Jerome. Okay, this has moved even this morning. What this shows right here, make sure I've got you on the right screen, which I do. Right here, let's get the crayons out for a second. Okay, this is an 82% chance of a rate cut down to here, 4.25 to 4.5, because the current rate is at 4.5 to 4.75. So this would be 0.25%, 25 basis points. However you, that's the fancy way to say it, by the way. We call it 0.25%. The Wall Street people call it 25 basis points. This is a 17% chance. As you can see, those two numbers match of no rate change, of 0% change. So what we got this morning, even though it's a bunch of BS out of the Bureau of Labor and Statistics, when it comes to the inflation numbers, is actually good for silver and gold here in the coming month, right? So it'd be interesting now. Is the bottom in on the silver and gold price? I want to go out to check on Pimbex, and we're going to check on the silver and gold price. And then I want to talk to you about today's sponsor, 49 Gold. It's a very interesting company, very interesting opportunity. But let's go out to Pimbex and press the magic button. Channel sponsor, Pimbex, where you can get your hands on gold, silver, platinum group metals, right? Ultra competitive pricing, great selection, a company you can trust, and a company you can also know that your fellow basement dwellers have given me overwhelming positive feedback on. So, oh boy, last we checked, we were down $20 on the gold price. You guys ready for the update? Take your blood pressure medicine. We're going to press the Pimbex magic button. And all right, gold's up $1.40. Silver only down $30.63. You know, we're hanging in there, guys. We are hanging in there. The dust is still settling. The gold and silver market are digesting massive changes. The Trump landslide victory, which was really a black swan, or at least a gray swan in my book. There's a lot going on. I want to talk to you right now about the sponsor of today's video, 49 Gold. And I'm going to pull up their website. Let's make sure we're on the right page, which we are. This is a company that I've become very interested in. It's a very unique proposition. They have a gold mining exploration project in California. And I'm going to tell you all about it here in a second, but this is their website, 49gold.ca. I have a link to that and some other literature in the description of this video. But let me tell you what I find interesting about this company. Number one, lately, the stock has been on quite a tear. This is their Canadian listing, FNAU. And as you can see, and as of this morning, last time I checked, the price was actually closer to 48 cents Canadian. But as you can see here over the last short period of time, the stock has moved from about, I don't know, 24, 23 cents all the way up to 46. But this morning, measured in Canadian dollars, it was closer to 49 cents per share. Here's their website. Look, this company they're reviving a historic gold and silver project in California. They're breathing new life into the Hayden Hill project. It's a past producing gold and silver property. And like I said, it's in California. It was previously owned by a company called Amax. And when it was in production, right, it was like 4 or 5 years, it produced 480,000 ounces of gold and 1.3 million ounces of silver. But then around 1997, Kinross, right? You know Kinross, they're one of these massive gold mining companies. They bought out the company that owned this project and kind of mothballed it, like put it on hold. They were more interested in some other projects that the company had. So it focused on other properties, and they left this Hayden Hill project just kind of sitting there under the radar. Okay, so it hasn't been drill tested in like 27 years. It presents a real rare, untested opportunity in a prime area. Again, you know, there was nothing wrong with this project. It was just that Kinross was more interested in a couple other projects that the company had. So they just kind of put this thing on hold, and it sat there. Now, 49 Gold recently acquired this project on very favorable terms. And what's exciting about it is they're going to reevaluate this situation. They're going to reevaluate how the deposit is defined, and there's a lot of potential, right? Because now we can use modern exploration techniques and understanding of this type of deposit. This is a low sulfidation deposit, have advanced significantly since over the last 27 years, since the last time that this project was drill tested and really anyone had spent any time looking at it. So it's an exciting opportunity, like for a fresh set of eyes to come in and look at this project. I'm going to play this little video here. You won't have any audio, but if you go to their website, I would highly recommend. Oh, I better pause that. This is a great video to watch, which gives a great description of what the company is doing right now with the project. Now, California, a lot of people mistakenly think that California is not a good place to have a mine. That is dead wrong. There's over 700 active mines in California right now, gold mines. It's a prime location and actually a gold mining friendly environment. Okay, and remember, right, this Hayden Hill project, it is gold and silver in the ground in California. Okay, and this was a past producing mine that had done very, very well. And with a new set of eyes coming in to look at this project, right? Look at it with just more modern exploration techniques. But there's also this idea that maybe the previous operators weren't looking at the project even back then in a proper way, didn't have a full understanding of kind of how this deposit had developed. They've got an expert team with a proven track record, right? They got a board and technical team with a big global track record of discovering and advancing gold deposits, especially epithermal systems, which gives Hayden a strong foundation for growth. Their share structure, there's only 18 million shares outstanding. Remember, guys, we are in a thriving gold market right now. Even at $2,600 gold, new eyes, new investors are moving into the gold mining, gold exploration sector. And really, these small companies, right, these smaller mining companies have yet to have the full benefit of investors moving into the sector, right? I mean, it's going to take just a little bit of money moving into the junior sector for big potential capital appreciation in share prices. I think it's a great opportunity. You know, it's a deposit that was kind of ignored for the last 27 years, flew under the radar, right? Remember, it was also likely kind of misinterpreted by the previous operators over 25 years ago. It's in California. It's gold and silver in the ground. They also have a large data set of drill results from the previous operators. 327,000 feet of exploration drilling from 742 holes. That was a major investment that was made by the past producers, and it's going to be interpreted through, again, a new set of eyes. And I hear the company talk about bonanza grade mineralization. So it's an exciting opportunity. If you want to learn more about the company, let me get back here. Hold on, guys. Again, the website, 49sgold.ca. Here are the ticker symbols in Canada, FNAU. In the US on the OTC, FNAUF. I've got links to the website. I got links to some other write-ups and literature about the company in the description of this video. Look, I'm not giving financial advice. You know that, right? This is a sponsored video, but this company really piqued my interest. I think they're in a unique position, right? Especially this is in the United States. This is a past producer. And this is a fresh set of eyes, an experienced team, right, with a great track record looking at this project. I think it could have some exciting prospects for the future. Again, do your own due diligence. I'm not giving financial advice, but I will tell you it's one that I'm going to be keeping a close eye on. And let's talk about something I think is very interesting, and this relates to 49's gold. And let's talk about how gold and silver have reacted during previous major market meltdowns. Because when we take a look, hold on here. let me go back, and here we are. Okay, gold corrections, right? Like, now we know, right? Look, guys, since Donald Trump was elected president, the gold price has gone down by what, 7%? Oh my gosh, and it feels like the sky is falling. But is it really? Let's look at this through the lens of previous bull markets. We did this with silver yesterday, but let's look at this through the lens of previous bull markets and see if we should really be so concerned with this recent 7% down. This is a chart from gold silver. This shows gold corrections, which had occurred during the 2009 to 2011 big, massive move in the gold price. Remember, we went from $800 an ounce for gold in January of 2009 all the way up to what, $1,900 in September of 2011. So that's what, about 3 years, right? Massive, massive move in the gold price. But look at this. Here's a 7% drawdown like we've just had. Okay, let me get quickly, I'll get the crayons out. Right here. Are we right here right now? Because that's about the drawdown that we've recently had. And look at all these other, during that 3-year process where the net move in the gold price, right, was up by about 12, let's see if I can do this, $1,200 over that time period, right? We had drawdowns 8%, 10%, right here in January of 2010, 4%, another 8%, another 7%. So we need to keep that in perspective while we're all a little nervous and jerky, right? Are you feeling nervous and scared, a little scared about what's going on in the gold market? Well, the reality is, right? The reality is that in any bull market, there are going to be pullbacks. Now, look, if in February or March, we're talking about a gold price at $2,400, $2,300, then we can get real concerned. But for right now, right, as we stand, and let's go out and take another quick look, channel sponsor Pembex. All right, we're still at $2,600 gold. Now, let's move on to silver. We did this extensively yesterday. Silver has had an 11% drawdown, and I looked at it, silver, since Trump elected, down 11%. I know it stinks. I'm with you. It's no fun. But just look at all these numbers, again, from January of 2009 through the same time period where silver went from 12 to 50, right? 12%, 11%, 14, 12, 12, 14. I mean, the same thing is absolutely true with silver. This is another way to look at the gold bull market that happened from 2001 through 2011. Now, during that period, gold went from what, about $300 all the way up to $1,800, $1,900. And again, look at all these drawdowns that occurred, 8, 9, 7. This is where we are right now. Let me draw a line on here. Hold on. This is critical. And we're even going to change the color here. Okay, and all right. So here is 7%. Oh, wrong. We go down a little bit. There we go. That's a 7% drawdown. That is where we are right now in the gold price. Look, during that period, how many 7% drawdowns we had? Probably 20. I'm not going to count them all. But some of these price drawdowns were much more significant. 16%, 12%, 27%, 15%. I mean, guys, I know it's been a little scary, no doubt about it. However, the reality is what's going on right now is normal, healthy behavior. And sometimes, right, you've been through that in life. I'm 54. I don't know how old you are. Normal, healthy development and behavior includes some tough periods, right? That's how we learn. That's how we grow. What's going on right now? If we are indeed still in a bull market for gold and silver and the precious metal mining stocks, is called a consolidation. The weak hands are selling, right? Anybody who wanted to get out of gold at 2,700 or 2,600 is gone, right? And what we're building, if we are indeed still in a bull market, is a strong base of people who are going to hold their silver at $31, who are going to hold their gold at 2,600, And as we move, think of all this uncertainty that's facing us. I mean, if Elon Musk and Vivek do half of what they say, it's going to create earthquake. It's going to be dumbfounding what could happen here in the coming year, right? On top of that, guys, we can't forget. We can't forget this. Oh boy. Let's go take a look. Let's go on our daily field trip and right? We're getting there. It's going to be just a matter of days when we can, I don't want to use the word celebrate, right? We're going to be rattled by the fact that we've reached $36 trillion in debt in the United States. Interest on the debt, right? It's going to be $1 trillion soon. This is not going anywhere. We are in for a major period of uncertainty. Everybody was wrong about 2024, saying it was going to be a crazy year. Now that everything is settling down, do you think maybe 2025 and possibly here, right? We still have 6-7 weeks left in 2024, but that could prove to be the real crazy. A lot of uncertainty. And uncertainty, the reason why it's important as a silver and gold investor to monitor the uncertainty in the world is because silver and gold, all the precious metals, thrive on uncertainty. Here's the old dollar to silver ratio right now. We're approaching 990 again. That number represents the amount of dollars being created via the M2 money supply for each 1 ounce of silver that the world is creating. So for each 1 ounce of silver being created right now, we got 989, of course, right? Because we like our list. We're going to go out here and do an update. Today is the 13th, 11-13-24. And we are at 989. Wow, it just continues. Again, for those of you who are new, we started tracking this on the 21st, about 3 weeks ago. 21st of October, we were at 729 paper unicorn fart dust, make-believe fiat dollars for each 1 ounce of silver. Now we're almost at 1,000. Before I forget, I want to say thank you to the moderators who are helping out today. Jake from Jake's Custom Parts, Susie, Silver Susie, right? My friend, right? The one and only Annie Oakley. And Susie's more than my friend. She's also my wife. Annie Oakley, you're the one and only, but you're not my wife, as you know, and probably are grateful for. And Big Tim, the Silver Shire, but most important, you. Guys, we are a group, right? We're a little tribe that gets together on a daily basis. And we have this bond, right? This common interest, which is gold and silver. But I'm telling you, you got a lot more. The people that are in this channel are smart, intelligent. And I can tell you what Google tells me, right? Advertisers are willing to spend a lot of money to get their ads in front of you, right? That means you're smart people that are respected not only by me and your fellow community, but also by the whole advertising community. Somebody pointed that out to me yesterday. So congratulations, basement dwellers. You're upper echelon, but we knew that all along. Let's talk about what happens during. Are we headed towards like a major economic issue in this country? A major crash potential in this country for the economy. Many people believe so. We're going to look at some data later that is downright frightening. Okay, and when the crash happens, if a major recession, what about a depression? Can you even fathom that? Like, if you noticed, nobody talks about depressions anymore. But if that were to happen, how will gold perform? How will silver perform? How will the precious metal mining stocks perform? Everybody says, oh, gold's got to go down, gold mining stocks, because that's what happened during the great financial crisis. That's what happened during the C-19 crisis. Not necessarily, okay? Not necessarily. Let's take a look at some data that indicates otherwise to us. This comes from Kevin Smith. He's a chartered financial analyst. We're going to run through a number of charts that he posted on X. First, let's look at this one. This is U.S. gold miner shines in the Great Depression. On the left is the Dow Jones Industrial Average during the Great Depression. As you can see, right, that was the big market crash. In yellow is Homestake Mining. One of the biggest, that was like the Barrick or Newmont Mining of the time, big gold mining company. How did it do, right? As you can see, in 1926, it was much lower, but as the market crashed, the blue line, the general market, the Dow Jones, home stake mining did quite well. But wait, there's more. There is more, which indicates to us, okay, 1973 to 1974. Again, the blue line, the S&P 500. Right? How old were you in 1973? I was 4 years old. Not quite. I was more following Sesame Street than the markets, but nonetheless, the market had a horrible downdraft, right? Down by almost 50%, as you can see here. Make sure I've got you on the right screen, which I do. Okay. And how about the Barron's Gold Mining Index? This is an index that tracked all the gold mine again during that period. It did super well. Gold performed well. Gold mining stocks performed well during a period of great economic calamity, the early 70s. And we're in worse shape now on any metric than we were back then. Let's take a look at this one. The entire 1970 to 1980 bull market for gold miners versus the S&P 500. Remember, right, the gold price went ballistic during that period, and some people, including me, think we could be in for that again. Again, the S&P 500 stagnant basically, and that's what I think we're probably going to see with the S&P 500 over the next 10 years. But look at the yellow, the Barron's Gold. I mean, look, right? That index went up from 120 to 960. That's about an 8x, 800% increase when the general markets remained stagnant. Okay, we got more. We've got more. What about the tech bubble? Okay, the blue line is the NASDAQ crashed. Okay, this time period goes from 2000 up until about the great financial crisis. The NASDAQ, the blue line, crashes after the tech bubble burst in 1999, 2000, 2001. And on the right, the yellow line is the what is that called? The Philadelphia Gold, the XAU, Philadelphia Gold and Silver Index. It did very well, right? The NASDAQ came back a little bit, but look how the gold and silver index way outperformed, and that was during the tech bubble burst. And finally, okay, this just shows the junior explorers. This is for the metals explorers. This is the TSXV, the Toronto Stock Exchange Venture Exchange, which is where a lot of the junior companies are listed, right? There's a lot of junior companies there. The junior sector, and that would even include companies, although I don't believe they're on the TSXV, but they're a junior exploration mining company, 49's Gold, that we talked about earlier. That would be the yellow line, okay? And that's where we are right now. This shows the gross undervaluation of where we are now compared to the blue line. I mean, look at that. Look how high the yellow line was in 07, 08. That, again, that's the kind of an index of the junior explorers. How much higher, and look how the S&P 500 has now gone. Look at this gap. If this were to catch up to this, right, if the junior mining stocks were to catch up or even surpass, you're looking at least 7 times return. Again, I'm not giving financial advice. I'm not making predictions. I'm just kind of telling you what's going on. And this shows the lag in exploration companies, which will impact the price of silver and gold because there's been so little capital invested in the exploration segment of the silver and gold mining sector that the pipeline for future supply is very, very limited. And again, the turquoise colored line is the TSX Venture. Okay, the yellow is spot gold, gray is spot silver, and the blue is the overall Philadelphia. These are the bigger companies, gold and silver index. See, you can see it's lagging. Okay, there's the gold and silver price. It's lagging, but the juniors, the turquoise color, they are way, way down. And again, if you look back here, right, back in 2011, they were the ones that were exceeding. If we were to see that happen again, guys, it could mean explosive returns for the junior silver mining, development stage, exploration stage companies, and the junior gold mining, exploration and development stage companies. They have all just been, they're at very, very attractive valuations. Now, you know, again, I'm not giving financial advice. I own a lot of these companies, a lot of them, both in the silver and gold sector. I would have told you the same thing 18 months ago, you know, and a lot of these stocks were twice as high as they are now. Trust me, I eat my own cooking. You know, channel sponsor First Mining Gold and Fortuna Mining are two stocks that I own extensive positions in myself. You know, the gold mining stocks in general are risky, right? Gold mining stocks definitely fit into that category as well. But at the same time, they do offer, and that's why I hold them. I think two things: a great value right now. Warren Buffett always said, you know, price is what you pay, value is what you get. And I think with the junior mining sector, although Fortuna Mining is more of an intermediate producer at this point, they're still way undervalued. You know, price is what you pay, value is what you get. And when I compare these mining stocks to tech stocks or anything like that, it's unbelievable, right? What you get. Now, look, I have a degree in accounting. I worked for one of the big four accounting firms. I'm not bragging. What I'm telling you is I know what I'm talking about. Just like a musician can read a sheet of music, I can't read music. I can't read a sheet of music. But you hand me a balance sheet, a cash flow statement, or an income statement from a publicly traded company, I can read that. And when I read these statements from these junior mining companies, in my opinion, the value proposition is absolutely astounding. But the reason why, even if you know, all of us have this core interest in the silver and gold price, it's so critical and such good news for us to remember that when we look at these junior mining stocks, how that impacts long term, even intermediate term at this point, the price of gold and silver. Do you know why? Because look, there's been no money, very little money. Remember those charts we looked at going into the junior mining sector? I got news for you, Buttercup. Guess where the supply of future gold comes from? Guess where the supply of future silver comes from? Excuse me, I had to take a little break there. It comes from exploration and development. If there's no money or very little money going into that sector, there's not a lot of exploration and development going on. And to further complicate the matter, the big mining companies, the Newmonts and the Barricks and the Agnico Eagles, the big mining, silver and gold mining companies, right? They've not been investing in exploration or development. And you know why? Because they were fighting to survive over the last decade. They were more focused on paying off debt, shoring up their balance sheets. So you've got these big, massive gold mining companies, and they need, every time they dig up an ounce of gold or silver, this will impact the price of gold and silver in the coming 5 to 10 years, maybe 5 months. But nonetheless, every time they dig up an ounce of gold or an ounce of silver, it's gone forever, right? It's a depletion business. They have to find more gold, more silver. And if they haven't themselves been investing in exploration and the junior sector has been neglected, right? The companies that are around in the junior sector, companies like First Mining Gold, companies like 49's Gold, who sponsored this video today, right, are going to be probably the only option for these bigger companies that need to replace the ounces. And as the supply of gold and silver continues to go down, right, the price of gold and silver will continue to go up. Let's talk about the meltdown. Let's talk about the coming disaster heading our way. Bubble, okay? Look, I'm going to go on a little bit of a rant. When we look at the general stock market, any person who put money into the general market over the last 20 years has just made unbelievable returns. But I'm telling you, right, I can read the financials. I can read the metrics. The whole stock market on any metric right now is so overvalued compared to the tech bubble era, compared to the great financial crisis. I would go as far as to say that many of the larger segments of the overall market, I am not talking about the gold and silver mining companies, the overall market, are essentially almost like a Ponzi. They just rely on new people coming in for people to get their money out, and what the underlying value is just not there. But think about this. On top of that, these crazy valuations in the general stock market right? This Ponzi-ish environment and from many components of the market, there's something else and very important to consider, right? It's all measured in these paper dollars, make-believe dollars, which many people would also say, based upon the U.S. debt clock, is also kind of a Ponzi. It's like the stock market is a Ponzi scheme measured in a Ponzi currency. I mean, are we headed for like very difficult times ahead? Let's take a look at some data that came out that I found super interesting. Okay. This came from Markets and Mayhem. Wow. Americans have a record amount of their assets invested in stocks, exceeding the highest seen since the internet bubble that imploded in the year 2000. And remember what happened to the gold and silver price and miners from 2001 to 2011. Take a look at this chart. This is shocking. Okay. U.S. households aggregate financial asset allocation, equity. This means stock market. Let's get the crayons out here. Okay. This blue line. Okay. U.S. households have now 50% of their financial assets in the stock market. What happens? What happens if we have a stock market crash? What do you think happens? Those people are going to freak, right? Remember, here, let's pull it up. It's been a while. See if I can pull this up real quickly. And I want to show you something. Oh, those were the good old days, the cup and handle. The old silver cup and handle. There's the wedgie we broke out of, Head and Shoulders. Keep going. Come on. I know you're in. There it is, guys, right? Remember that stock market, everything is based on gold and silver. When the stock market crashes and those people freak, right? The money, this is Exter's pyramid for those of you who are new. This, in no uncertain terms, shows us that gold and silver are the base. It's an upside-down pyramid. Everything else is synthetic, including the stock market, including NVIDIA stock, however you want to say it. And when that money, when those people freak, when they lose 40%, right, of their 401k, and then they're like, well, what am I going to do? I want to save what I can. And they're faced with a currency, the dollar, right, that's losing value. They also know when they go to the grocery store, right? Gas is going up, groceries are going up. They're going to go to what everybody knows already. The seed's already been planted. Every American knows gold and silver are valuable. Nobody invests in it, but the seed's been planted. They will come to the silver and gold market. Now, guys, we need to have a very serious discussion right now because it's not just the stock market. Hold on here. There we are. It's not just the stock market that's in big trouble. Most people don't know this. The bond market is multiple times bigger than the stock market. The stock market gets all the attention, right? On CNBC, it's like 80-20. Hardly anybody pays attention to the bond market. There's big signs of trouble in the bond market, and that also has the potential to send major shockwaves through the U.S. economy. Irrational exuberance is almost everywhere, okay? Irrational exuberance. U.S. consumer bond spreads have declined to their lowest in 26 years. The extra yield above U.S. Treasuries is even below the 2008 levels just before the great financial crisis. We are in worse shape by this measurement than before the great financial crisis. What this means, okay, this is the amount for U.S. corporate bonds, the amount of interest that U.S. corporate bonds pay, which is greater than what U.S. Treasury bonds pay. So usually U.S. corporate bonds should pay a significant amount more because in theory there's more risk, right? U.S. government, it's good, it's the safest bond that you can buy. Ha ha. If you don't mind losing 4% of your money every year to inflation. We digress. Typically corporate bonds, like here, if we look here, let me that's not my drawing. I want to draw this so you understand this. If we look here, okay, like back in 2019, it was at 1.5. So that would mean that if like a U.S. Treasury bond was paying 3%, then an average corporate bond would be paying 4.5%, right? Typically, the corporate bonds pay more. We are down here in precariously low. That is a sign of a bubble and not a healthy sign, because like he said, the last time that was there was right before the 2011 2007, 2008 great financial crisis. Okay. The other thing to remember is, as people look at our bonds, the bonds, the U.S. bond market right now, the U.S. Treasury bond market, what's a 30-year bond pay? Like 4%, maybe 5%. I haven't looked lately. I think it's like 4% interest. Are you going to tie your money up for 30 or 20 or even 10 years? The 10-year bond is like what, 4.3%? Even 10 years. Think about this, right? If you had $100,000 and you bought a 10-year U.S. Treasury bond at 4.5%, they're going to pay you 4.5%. But guess what? I got a little surprise for you. You got to pay taxes on that $4,500 interest you make every year. So really, you're only making 3%. Now, we know from earlier today that the official inflation rate is supposedly 2.6. We'll round that up to 3%. We know that in reality, the real inflation rate is probably closer to 7 or 8%. So if you give the government $100,000, they pay you 4%, 4.5%, you pay taxes on that interest, you're really only making 3%. But at the same time, the value of those dollars, that 100,000, that principal you put in, is dropping by 7 or 8% a year. You're losing money. That's called negative real interest rates. That's called inflation, right? That's called the value of the dollar going down. There is nothing that is going to drive the price of silver and gold. I'm sorry, I got to break it to you. In the coming couple years, right? It's gaining traction now than inflation. So be prepared, okay? And then we're going to talk about crypto. It's unbelievable. But one last point to show just how wonderful the hold on here. Where'd it go? Hold on. Nope. Here it is. Okay. Get you on the right screen. And the residential, think about the average Americans in silver and gold. When are they going to come running? When are they going to have the light bulb moment? When the stock market crashes, right? When the bond market crashes, right? And they're like, well, I'm not going to buy bonds. They're crashing. I'm not going to buy stocks. They're crashing. I know my money's losing. I know I'm losing out to inflation. What about real estate? And I would say, and I've said this all along, this house that I'm broadcasting to you from is not worth what Zillow says it's worth, is not worth what people have recently paid for houses in my neighborhood, which is $500,000, which does not make sense to me. Not worth it, okay? And what we're seeing now is a big slowdown in what were some of the hottest markets in Orlando, Florida. Year over year, there are now 57% more houses for sale in Orlando, just compared to the last year, almost 60%. Almost 300% higher available inventory than what we saw during the C-19 crisis. So this real estate market is in trouble, is not getting better, right? And is going to be a big issue. Now, let's go take a look and see what the crypto. It's unbelievable what has been happening in the crypto market. And we're going to do an update on the silver and gold price here as well. Gold's down $3 in the futures market. Are they clobbering silver? Hold on here. Make sure we got you guys. We do. I have so many windows open. Crude oil is down. Okay, but let's look at, silver's down 3 cents. I wonder what happened here. We had a kind of a big abrupt, maybe that was the COMEX opened up. But let's go look at our friend Bitcoin. $91,000 per Bitcoin. Okay, this is getting incredible. I want to share with you this, okay? This happened a few days ago. The market cap of Bitcoin is now officially larger than the market cap of silver at 1.7 trillion. So Bitcoin has overtaken silver. I'm not anti-Bitcoin, but I don't own any Bitcoin. I don't own any cryptocurrency. It's unbelievable. Some people, some people that aren't fans of Bitcoin say that it could be the biggest Ponzi, the biggest bubble in the history of the world. Some people claim that it was created specifically. There's even, and I'm going to emphasize, what's the word? Conspiracy type theory that the government created it as a place for money that would otherwise have gone into silver and gold to get siphoned off into. I'm just telling you what some people say. I'm not sure. I never did quite understand where it came from. But I do know that the big major banks and the mainstream media are pumping Bitcoin, right? And of course, there's this perception that Donald Trump is going to be pro Bitcoin. It's going to be interesting to see how this plays out. But look at this. Is this a bubble? Remember Doge? This is not the Department of Government, whatever. No, this is the Doge coin, which was made as a joke initially, and it was like had something to do with a dog. But back-to-back candles, Dogecoin is now valued at $62 billion. That's not the crazy part. The crazy part here is that is now worth more than General Motors, Hilton, Allstate, AIG, Occidental Petroleum, NASDAQ, Dr. Pepper. My kids love Dr. Pepper, my 12-year-old daughters. Dr. Pepper was almost gone. Now it's like a really popular soda again, and I like it myself. Discover, Ford Motor Company. Guys, this is Dogecoin, okay? It's now worth more than Ford Motor Company. This was like a crypto that was created as a joke, as I understand it. I don't know. I'll ask you, are we in a bubble? Are we in a bubble? Are we in reality? I don't know, right? It's like, I mean, we know that the Fed, think about this. We know that the Fed has created this like fantasy island monetary and fiscal system, no doubt about it, right? And now we have things like Dogecoin that are more valuable than Allstate Insurance, more valuable than Ford Motor Company. Are we in a bit of are we having a Wile E. Coyote moment in this country? Remember when Wile E. Coyote runs off the ledge and he's still running, and then all of a sudden, shoo, down he goes? I don't know. It seems a little interesting. Oh, man. Don't forget what happened last week. That would have been this morning, 1 week ago, right? Not a political statement. I'm not saying this in a bad way. I have my own political beliefs, which probably align with yours. I'll say that. However, the Donald Trump election was a black swan. It was a total... the election itself, him being elected, was not a black swan. The severity of the beating that he provided to the Democrats, right, on the presidential election, even from a Senate and House perspective, that, my friends, was a black swan. Nobody expected that. Everybody expected a very tight race, a contested race. Some people, and again, if your candidate didn't win, I'm sorry. I mean, I'm not. This is not a political statement. Some people thought that Kamala would win. Some people thought that it would be that Trump would win. Some people thought that it would be a very tight race that would be contested and would go on for months and months. I probably fell into that category, right? Nobody thought that Donald Trump would win in the commanding fashion in which he won. And now, right, that was a black swan. And after black swan, and now we're getting like news of who he's appointing. We have this news with Elon Musk and Vivek Ramaswamy that are going to send shockwaves through the federal government. We've become kind of a country that was dependent on government spending, federal government kind of making the economy look good. They're talking about stripping a lot of that out. It is going to be, I was wrong. At the end of 2023, I said Katie Bar in 2024 did have some turmoil, but nothing major. I got a feeling maybe, we were early on that, and 2025 could prove to be a year with a lot of uncertainty. Now, why is that important to you as a silver and gold investor? Because there is no better place. It's like a tornado shelter. There's no better place to be during a tornado than a tornado shelter. There's no better place for you to be, right, during periods of massive uncertainty than invested in silver, gold, precious metal mining stocks. I could be wrong. I was wrong about 2024. The severity of the issues that we'd be facing. But I am flummoxed as I look out to next year. I mean, it is going to be unpredictably unpredictable, right? We said that before the big election. We had all these people saying what would happen to silver and gold. Look, we talked about this, right? The only certainty that I said we had before the election was uncertainty. And I think that's been ratcheted up quite a while. I think what's happening in gold and silver right now stink, right? Down 7% in gold, 12% in silver. No doubt about it. My heart goes out to you. Trust me, I'm in the same boat. Remember, we're in the same silver and gold lifeboat. But I feel like the dust is settling, right? A lot of big stuff is being digested by the metals markets. And I think a lot of the weak hands are being flushed out. And that as we move into the rest of the year and into 2025, right, that we could see significantly higher prices for both silver, gold, and for the precious metal mining stocks. No doubt about it. Let's run out and do an update on the price. See if it got worse. We were up 30 cents in silver earlier, and I got a feeling we're going to be down even more. Oh, hey, we're at a green zero. We'll take our wins while we can, right? Hey, guys, don't forget, if you want to get silver, gold, or platinum group metals, Pembex makes our group, makes our tribe possible. I couldn't do this without, we're raising a family here off this channel without support from channel sponsor Pembex. But what makes me feel best about Pembex, undoubtedly, right, is that I believe in the company 100%. I actually was a customer of theirs. I think I made either 2 or 3 orders from Pembex before they sponsored Ron's Basement, right? I own First Mining Gold stock. I own Fortuna Mining stock, right? I'm only going to do sponsorships with these companies if I believe in them personally. That doesn't mean you have to believe in them, but I know, right? And what makes me feel so good about Pembex in terms of people being able to get silver and gold is that they've treated everyone so well. Thanks for being here. Thanks for being part of the basement. Take care of yourself. Have a great day, and I'll see you soon.